Okay. So my initial plan was that this session was supposed to be in two phases, right? Two
Okay.
phases. So we're supposed to talk about risk management, how to place the stop loss, take profit, and then how to calculate your loss price and all that. Okay. Before I go into the strategy proper. All right.
Yeah.
So risk management is very important. Risk management is very important. Like what I'll always say, there's no right or wrong way of trading. All right. There's no right or wrong way of trading. Now, if you are trading, you need to always consider how much you are willing to lose before entering a trade. You should have that at the back of your mind. Like, okay, for instance, I want to enter this trade. I have $100 balance account or $1,000 balance account, and then I want to risk about, let's say, 20% or let's say $20 out of that $1,000 on this particular trade. All right. So you must be willing, and I must be willing to accept that loss before you enter the trade. You must have already considered in your mind, man, I want to lose this $20 on entering this trade. All right. I'm willing to lose $20. If anything happens to use $20, I won't feel bad. I won't see myself. But if you know that if you lose any amount of money, like let's say $10, $20, and then $50, you go and hit your head on the wall and feel bad all throughout that day. I feel trading is not for you. Either trading is not for you, or you are trading with so much amount that your capacity has not been built up to yet to live. And I think you should stick down to, let's say, um, trading a $100 account and then risking $2. All right. If you know that you lose $2, it won't really affect you in any way. It won't affect your emotions. You won't go crazy for that day and kill everybody around you and just kill you anyway. So you should always be able to assess yourself, right? Assess yourself at certain points in time and say, okay, this is the amount I can afford to be losing. Like if I want to lose money, let me be losing this amount. Let's say let me be losing $1, $1, or $2 or $2. So as time goes on, your capacity grows, all right. Your capacity to handle money grows, and then you can see yourself losing $20, you won't feel it. $200, you won't feel it because in trading, these days, it's not something you just being all profit, all profit, all profit every day. Okay, there are some days you lose money, right? There are some days you lose
Yeah.
money. If you lose money, what happens to you? How do you feel? Okay, how do you handle that emotion? It's
Loss.
very important. It's very important because um, if you lose money and then you come back to the market with aggressiveness, it's like, I want to make back that money. You find out that you lose even more money. All right. So your emotions have to be on check at any point in time. Your emotions have to be on check whenever you are trading. Okay. So I always advise people to start trading with this amount of money. Don't just start trading with this amount of money because you want a strategy and you feel this strategy is 100% accurate or 95 or 90% accurate, and you feel that you never lose money, and then you risk what you cannot afford to lose in the market, right? And then
Mm.
it affects your emotions, and then you say trading is a scam, or I will not trade again and all that. So revenge, it's called revenge trading is very wrong. Revenge trading is not like you lose money and you come back to the market automatically and want to start trading. Usually what I advise people is when you lose money in the market, what what if you do? Just take a break, all right? Take a break and assess the reasons why you lose that trade. Check yourself. Why did I lose this trade? Analyze yourself. Why did I lose this trade? Was it that I was not thinking straight, or was it that I made the wrong analysis, or something happened? And then just take a break. Do something to take your mind off it, all right? You can just take a walk or watch a movie, play some music to calm yourself down, or take 1 day or 2 day off the market before you come out to the market and start analyzing the chart to start trading. Okay, so it's very important to not do revenge trading. Okay, now it's always important to calculate your lot size whenever you are trading. Calculate your lot size whenever you are going to the trade. But your lot size will determine how the price is going to move in your favor or against you. It's always good to calculate your lot size. Some persons they use fixed lot size. Let's say they use 0.01 to trade every time they want to trade. If you are doing that, you find out that you are not making progress. You might be making profits, all right? You might be making profit consistently, but you'll be making progress because you are just making the same amount of profit every day and your balance is increasing. If you say that your balance increases your lot size will increase in proportion, all right? You should be risking percentage. You should focus on risking on percentage, not risking a particular amount of money for each trade. That's where I say you risk percentage. It's okay, I want to risk in 2% of my account. So if you have a $100 account today and you risk 2%, it will be $2. And if your account goes up to like $150, 2% will no longer be $2. All right. 2% will change. It goes up to $200. 2% will not be $2. 2% will go up to like let's say $4. All right, $4 as the case may be. So it's always good to reach percentage so that if your account is growing, you are gaining more profit. All right, you are gaining more profit, and your capacity to lose higher money is also growing. Okay, and then number three, I want to really hold us to always calculate your loss size for entering a trade. All right, always calculate your always use stop loss. Always use stop loss. Stop loss is very important in a trade. All right. Whenever you are
Yeah.
placing a trade, always make sure that you are not distracted at that time. Because sometimes you may be distracted and placing a trade, and then you forget to put your stop loss, and then you take your mind off the market and you're doing something else, and then you come back. You see that the market has taken more than what you could afford to lose on that particular trade. So setting your stop loss is always important, and never adjust your stop loss. All right. If you have calculated your stop loss and this is one of your stop loss, the market is going against you, allow you to hit your stop loss. Please allow you to hit your stop loss. Don't adjust your stop loss. You say, this thing, the way I look out, it might still come back. All right. Don't adjust your stop loss. Allow you to hit your stop loss. Take the loss. All right. Losses are lessons. They are not actually lessons lost all the way. They're supposed to be lessons for you, all right? So when you lost, you take it as lessons, and then you check why you lost that. Probably your stop loss is so tight, but then if you allow you to hit your stop loss, you would have learned a lesson not to put a very tight stop loss for a particular trade or for a particular percentage. Okay. And
Yeah.
and then don't adjust your stop loss that I was saying. Okay. Allow it your stop loss. Also take profit should also be there so that when price gets to your take profit level, you hit it and then you are off the market. Okay. Because if you start adjusting your stop loss, or remove your stop loss entirely, with hope that the market will come back. At the end of the day, you find that your market will not come back. Always learn to cut your losses. Always learn to cut your losses early. Early. There was a time I was trading when I started trading. I entered the particular trade, and then the guy that gave us didn't give us stop loss. All right. So the market was going against me, I was new again. And then I kept on holding for days, 3 days. The market will come back. Eventually, I lost that whole account, like almost the whole account. At the end of the day, I closed in a loss of about, let's say, 50% of my account or 70% of the case may be. So it's always good to, stick with your plan, have a trading plan, and stick with it. Like, tell yourself that this is what I want to do. This is what I want to do. I will not change for any reason. I will not allow my emotions get the best of me. This is what I want to trade. This is how I want to trade. Okay. So start on trading, risk management and all that. So there are calculators you can use to get your, the calculators you can actually use to get your appropriate lot size. Okay. Your appropriate lot size. So let me see if I still have that calculator here. Just hold on, let me. All right, so the calculators you can use to calculate your risk, or you can go to the website. I think it's my FS book. Yeah, my FS book. Yeah, calculator on the website. My FS book. I will share the link on the WhatsApp group, my FS book, and also you can download the app on your phone so that you can start, you know, using to calculate your lot size. I also do a short video to show you guys how to use the SS calculator.
Okay,
Okay,
sir.
so let me quickly share my screen and then let me share my screen and then we'll dive right into the MP4. So I'm using my phone for this session. I'm using my phone to record this session. So let's go into the MP4. All right. So when you're placing a trade, like I said earlier on a previous video when I showed you how to use your phone to enter a trade. So let's look at gold. This is SAE USD here. That's good. Tap on it. All right. You view the chart. And then you can view analysis here. You can just um, make your phone landscape mode, like plant your phone to be like this, or you can do it straight with your analysis. Okay. So if you want to place a trade, just come here. You see trade at the top here. You click on trade. So when you click on trade, there's market execution at the top here. Market execution. So you can tap on market execution and you see other type of orders that you're taking. So for this case, the market execution, all right. So here 0.01, that's the lot size. You can tap on it and change the figure to 0.10. Okay. And then this is your stop loss here. You can see written there stop loss. You can enter your stop loss figure there, blah blah blah. And then your take profit. So yeah, I can either be selling or buying. In this case, we'll just let's see. Okay, the market is closed. The market is not open. If you click on sell, it won't work. So market is closed at the top there. So that's how to place your trade. So I'm just going to do a recap. I know we talked about this before in our previous class, all right? So just to do a recap on how to, place your trade. So quickly, let's go into the strategy for the day we are learning. The strategy we are learning for today is called riding the trend strategy. Sorry, guys, I'm too alright. I know that I'm too fast, but I'm trying to, rush the session so that we can finish up on time. It's recorded, don't worry, you can watch it at a spare time and get to understand what we're talking about here. Okay. So the strategy is riding the trend strategy. It's very, very easy to use strategy. So from Monday, actually, that you start seeing trades from you guys. As you start seeing trades from you guys, start putting your trade, start trading your trade. You start trading with this strategy. All right. So lot size to be using, start using let's say 0.01, 0.01 lot size. I hope we're writing, all right. I hope we're writing. Start using 0.01 for the purpose of learning. Okay. So
Okay.
in this strategy, we'll be focusing on two major indicators, or let's say one indicator, all right, with two different settings. Okay. The indicator we'll be using is EMA 20 and EMA 10. All right. That is exponential moving average. EMA 20, EMA 10. Okay. So I said here in this strategy, we'll be using two types of charts. Okay. Now our first chart is called filter chart. And then the second chart is called the entry chart or main chart. Write that down, please. The first chart is filter chart. Then the other chart is entry or main chart. Okay, yeah, I said filter chart is the chart you use to analyze the trend of the asset, okay, on higher time frames. And while entry chart or main chart, you go down two time frames below to get your entry. Are we together? Okay,
Yes, we
so
are.
yeah, so you can see an example here. If you have UI place here, okay. So this is entry for buy. I just zoomed in now. You see this cross here. Okay, so let's quickly go to our MP4 and do the proper teaching on this strategy. Okay, so first thing first, let me clear my indicator. Let me clear my indicator. Let me clear my indicator out for me. Okay, boom. So when you open your chart, it will look something like this. Okay, It will look something like this, or yours might have another color. On our other video, I showed you how to change the color of your chart. You don't like it, you see how to make it look something different or something like mine. Sometimes I change the colors of my candle to like, let's say, green and red or blue and red, as the case may be. Okay, so on your phone, if you are adding this indicator, it will be different from your computer. All right, it will be different from your computer. I showed you how to add indicators from your MP4 the other day. You can also do the same if you are trading from your PC. Okay, so to add indicator on your phone, you see this F sign at the top here. After the crosshair, there's an F sign there. Can you see that?
Yes, I can.
Okay, so once you tap on the F sign, and then you see main window, you see indicator window, okay? Now you're focusing on the main window, right? Yeah. So you tap on main window, and then all these indicators come out. Remember, we said in our second class, we said moving average is the trend indicator. So at the first column here, you see trend, different indicators on that trend. So you tap on moving average here, okay? When you tap on moving average, okay, mine is already set. So the period, the first one, the period will be 20, okay? Period will be 20, shift 0, apply to open, okay? So the method is exponential. Method is exponential, okay? So that's that. So you can change your color here to any color you want. So me, I'm using green. I'm using green in this case to just save. Like, remember your green, my green line now is my 20 moving average, okay? So we click on done, that's that, and then you add the second moving average. You click on the F sign again, click on the main window again. This time select the moving average again. So this time we'll change it to 10. Let me see. It's 10. We change it to 10. So let's change this color now to red. Red, okay, so we can identify it. So this one is period 10, shift 0, method is, okay, sorry. Sorry, so let me say it again. Okay. Okay. Can you see my screen now? Can you see my screen?
No, I can't see
Hello?
anything for now.
Can't see anything now.
I can't see your screen.
Can you see it now?
Yes, I can see it now.
Okay, so like I said, the second MA period 10, shift 0, exponential, apply to open, and then you click on done. As you can see here, we now have two EMAs, all right? So we now have the red EMA and then green EMA, as you can see. So the green one is the 20, which is the higher EMA, and then the red is the small EMA, which is the 10 EMA, all right? So the strategy, what I said is that you need two charts, all right, to analyze it, okay? So the filter chart will be you looking at the chart from a higher time frame, okay? Let's say in this case, we'll be using daily, okay? We'll be using daily to analyze this trade. Now this is daily. This is time frame here. There's monthly, weekly, daily, 4 hours. So let's use daily now to analyze this, okay? So in the lesson, I said to get your entry for a buy signal, okay? I said when the small moving average crosses the big moving average above, that's a buy signal, all right? You can see this point here. here, you can see that the red EMA cross above this green EMA, okay?
Yes.
Come together, all right? So this signifies a buy, all right? Yeah, but we are not taking the buy now, all right? So once you open your daily chart, and then let's say you open your chart for that day, and you are seeing this, that the red has crossed above the green for that day. At that particular time, you open it, all right? So what do you now do? You go 2 time frames down, 2 time frames down. Now we are on daily time frame. We've gotten that, okay, what we are looking for now to do is to buy on this particular asset. So now you go down 2 time frames, okay? From daily, we have 8 4, then you now go down to 1 hour. After daily, you have 4 hours. The next one is 1 hour. So you are going 2 time frames down. Let's go to 1 hour, okay? So now when you go to 1 hour, for the sake of this example, I will take my chart backwards, okay? I'll take my chart backward, okay? Let me see, let me locate that view. When it's crossed above, let me get the time. Please mute yourself if you're not talking. Please mute yourself if you're not talking, please. Hello, please mute yourself.
My device is muted.
Okay, so on the 9th of November, yeah, right? This is when it crossed. On the 9th of November. So let's go to our 1 hour. Let's go to 1 hour and let's get the 9th of November. Let's get the 9th of November. Let's see who could get an entry. For the sake of this class, this market is more moving. I'm going back to give us an example. Okay, so that we'll get this clear picture of how this strategy works. On the 9th of November, okay, this is 10, 9, this is 9, the 9th of November, okay. All right, so let's see. At that point, when you went to deal, you saw that market crossed above, all right? So now, when you come down to 8-1, what you now be looking for is that you now be looking for a point where the small moving average, which is the red moving average now, will not cross above the green moving average. Now, as soon as this happens here, as soon as it happens here, all right, you go in for a buy. As soon as you see that, you go in for a buy. And then when you take your buy here, and then you ride the trend, and then you keep on going on that trade, all right? You take your profit for that particular trade. So it's very simple. It's very simple to understand. Very simple. Let me recap. You go down to your daily time frame first of all to get the trend. All right. Let's say right now. Okay. Right now, what are we seeing now? Okay. On the current chart or price, we are seeing that the red just crossed below the green moving average. It just crossed. All right. So what we're looking for now by Monday, what we'll be looking for on gold is to sell gold. What we're looking for on gold is to sell gold. Okay. So now you come down 2 time frames down, which is 1 hour. 1 hour. So you see at this point here, the red moving average crossed below it. So you would have entered the market at this point here. You'd have entered the market at this point here.
Okay.
As soon as it just crossed, you'd have just sold. And then when you sell, you write it down. You write it down. You saw that as soon as it crossed below it, price started going down. If you have sold, you would have still been in profit. Okay, you would have still been in profit. So let's go back to our stuff here. Okay, from this example here, you can see that at this point when you cross here, above, this is a buy signal. You take the trade and you buy above, and then you gain profit. Okay. So also I said for sales, when the small moving average crosses below the big moving average, all right, you go in for a sell. Going for a sell, as you can see on this example here. You can see this example here, this place here, where I marked out. You can see that price or the small moving average cross below it here, indicating a sell at this point. So if you are sold from here, you would have cut massive peaks down to the downside. Okay. Now, whenever you are learning any strategy, three things is very important. Three things is very important. Like I said in our market analysis class, where I said, first of all, you need to identify the trend of the market. After identifying the trend, you need to be able to get your entry and most importantly, to get your exit strategy. So your exit can either be in loss or in profit. Your exit can either be in loss or in profit. Either way, you are leaving the market, which is exiting the market. Now, of course, you have to identify the trend. Identifying the trend, you go to a higher time frame to get the trend with your two moving averages. Once you have spotted the trend, here, let's go to D, let's use D. Once you have spotted the trend, now this is the downtrend because the red moving average crossed below the green moving average is the downtrend. Now you have been able to identify your trend from the higher time frame. Then you go down to H1 to get your entry. Your entry trigger is at the point where the small moving average cross below it. Now, if you enter your tag, let's say you go now to your H1 and then you are just seeing it now that, oh, this thing has gone far. Let me enter. Please don't enter. Please don't enter. Always wait. Always wait for the time where the stuff is happening in front of you. When it's happening in front of you, you can enter the market. If it has happened long ago, please leave the trade and let it go. You will get more opportunities. So far, it still crossed down on the daily time frame. You will get multiple opportunities during the day, or let's say in the course of that week, to see a sell trade or a buy trade, as the case may be. Do not run after the market. Do not catch a falling knife. When it's already falling, please don't catch it. Be there when it starts falling, and then you hold it on the top and it falls, and then you be in massive profit. Okay. So so the exit strategy here, the exit strategy now is like this. Okay, for instance, you enter the sell at this point here, right? You enter the sell here. If you want to exit this trade now, if you exit the trade when the red now crosses above the green moving average, and then you close the trade and take your profit. In this strategy, there is no stop loss, there's no take profit. You just have to monitor your trade. You have to monitor the trade. You have to monitor it. Okay. Once you see your moving average, let's say at this point, it crossed below it here, as you can see. It crossed below it here. Boom. As soon as you see this, you sell, and you keep on going, you keep on going, you keep on going, you keep on going. And then as soon as you see this at this point, so you see that the red crossed above it, the red crossed above it, and then you exit your trade immediately at this point. You have caught some massive peaks, okay? You have still caught some massive peaks. All right, guys. So that's for your exit strategy. Is it clear? Is it clear? Any question on that? Any
I think
question?
I think this is clear to me. Yeah.
Okay. So you can start making trades with this strategy on Monday once the market opens. All right. You can just go to the MT4. We have a lot of assets here. We have a lot of assets you can look into. You can just look. Let me look at the open chart, and then you go to daily. Identify the trend from daily. Zoom in to see what the EMA is doing. Okay, this one has not crossed yet, but it's looking like it wants to cross below, but it has not crossed. So since it has not crossed, it's still in an uptrend. It's still in an uptrend. So what you do, you go down to H1, and then what you are looking for now is to buy. You are looking for when this red will cross above this green. You'll be waiting for it. Once you see that the red crosses above the green, you will now buy from here. Okay? Sometimes it does not always go in your favor. It goes against you. But as soon as it crosses back the opposite side again, please exit the trade. You can exit it in some losses or in profit. So either way, okay? So your filter task must not necessarily be daily time frame, okay? You can also use H4 as your filter chart. You can say, okay, let me use H4 to identify the trend of the market. Okay, now let's see, okay, on H4 here, you are seeing that this is the downtrend because the small moving average is cross below the green one. So this is the downtrend. If you want to use an entry chart now, going 2 time frames down from H4 is now what 30 minutes. It's no longer 1 hour, it's now 30 minutes. So you click on 30 minutes. Okay. So now in 30 minutes, you'll be looking for where the red moving average will cross below it. And at this point here, it did that. It crossed below it here. So you'd have entered for a sell at this point here, and then cut some massive piece down to the downside here. Okay. So that's that on this strategy. It's very, very easy to use and very, very simple. Very, very simple. Okay. So any question, any question, any question? Let's take questions for the next 5 minutes. There's no question. Then we'll call it the night on the call. And then I'll post the recording in our WhatsApp group so you can watch it over and over again. Okay? So that you can understand this strategy. Any question from the top to bottom?
So yes, I have a question.
Okay.
So can I call me?
Is that?
Hello?
Yeah, I can hear you.
So I want to ask about the strategy line, the green line and the red line. So those two lines, what does this stand for?
Okay, those 2 lines are indicators. Okay, if you were here at the beginning of the class, all right, so I added those 2 indicators on the chart. It's called indicators, all right. It's called moving average indicator. So the red line you are seeing here is EMA, that's exponential moving average. So if on our previous class we talk about moving average, and we talk about different type of moving average. We have simple moving average, we have exponential moving average. So in this case, we are using exponential moving average. Okay. So to insert this moving average here, to insert it, all right. What you do, you see this F sign at the top here. I'm using the phone now to demonstrate. You can also do this on your computer. There's a different way. I posted a video on how to add indicators on your MP4 on your PC. All right. It's on our YouTube channel there. So you see this F sign here. Once you tap on this F sign,